Well, I want to talk about Amazon today. Amazon is the best of this bubble and in some ways the worst. Just came out last week again for a number of years. Amazon will pay no taxes on sales of $233 billion in 2018 and profits of $10.8 billion. Now, first of all, profits of $10.8 billion, 4.6%. That's a low profit margin for such a high-flying, dominant company. And people know that Jeff Bezos' strategy has been to gain market, just like the Japanese in the 70s, gain market share, cut prices, and create greater and greater economies of scale, cost advantages, and own the place. He didn't name the company Amazon for nothing. He saw it as the broadest distribution channel in this new world of digital commerce increasingly. And of course, he's moved into, stores and stuff as well, and in certain aspects and will. He plans to be dominant. Now, so a company this strong, not paying any taxes, and we just got tax cuts for companies. I mean, this is one of the things that's wrong with this bubble. Companies have it too good. The 35% tax cut really was not, or cutting from 35% was not really accurate. Companies were only paying 20% because we have so many more tax deductions. So it's not necessarily true that we pay higher taxes here, but we gave tax cuts anyway at the highest profits. Amazon, obviously one of the big beneficiaries. Look at their valuation, though. Amazon got up to $1 trillion valuation at its peak in 2017. At that time, $233 billion in sales in 2018, which wasn't known yet. It was 4.3 times sales. It was 5.6 times the 2017 sales, which would have been the known benchmark at that time. That's crazy. A normal valuation price to sales is 1 times, 2 times for a growth company. And of course, it can be more. And Amazon did grow 31% over its 2017 sales. So they are a growth company. But again, high valuations. That $10.8 billion is about 100 times earnings at that $1 trillion valuation. So again, we've got overvaluation, companies making record profits, getting tax cuts on top of that, using their record profits and their tax cuts and cheap money via the Fed quantitative easing to buy back their own stocks. That's what a lot of companies are doing. So again, Amazon's a company worth watching. And you should remember, in the last bubble, Amazon was one of the early leadership internet stocks. Internet went up 480% between late 98 and early 2000, that dark window. And that's what made the NASDAQ go up 280%. Most of it was the internet stocks, which were part of the NASDAQ. And Amazon went up to about 150, crashed from 2000 to 2001 to $7, 95% crash. But if there had to be in such a shakeout where zillions of internet companies, .coms with nothing going, no sales in some case, no profits in most cases, and then AOL at 400 times earnings to get extreme when it did have profits. This was the sale of a lifetime. Amazon was clearly one of the larger internet retailers and would have had one of the highest chances of succeeding and coming out of that shakeout a leader. And of course, now what is the stock recently? 1,600 plus from 7. That would have literally been one of these sales of a lifetime to buy in a crash. So that's coming again. And Amazon's a great stock, all the FANG stocks. The FANGs will lead this dark window if it continues, and it continues to look like we're going to see this dark window blow-off rally. And these companies will lead the crash, just like the auto companies, GM and Ford and RCA, the new radio company. RCA was the last bubble that came up the strongest at the end. Radio, communications, wireless communications. They were the tech leader at the end, just like the internet stocks in late 99 and the cryptos and things emerging now in this bubble. So we're going to see this bubble burst. I'm projecting between September of this year and March of next year. I used to say January 2020 was the most likely. But on Thursday, I'm going to show you a new simple leading indicator in economy and markets that would suggest September may be more likely. So again, we're going to be watching this. It's going to be exciting on the upside, and it's going to be even more exciting on the downside, and especially for our trading systems that love volatility. And we're designed for this era for you.